Hey, what's up, YouTube? It's Sean Straits from Max Options Trading. Apologize about the delay with all the videos. Just a crazy past couple weeks overall, even outside of the trading world. Had a lot of stuff to take care of. We actually have a lot of plays to go over, but due to the amount of time I can put on the video, we'll just go over one losing play and one winning play. Losing play because sometimes losing trades are more important than the winners, and we have to be able to identify our mistakes, what not to do next time, and what we can improve upon. So first things first, this video is rewinded back, FYI, just in case people think like, oh, my chart doesn't like Microsoft. So it's rewinded back to what was this, last week ish? Let me check. 13th. So like, oh yeah, two weeks ago. Damn, it's been a while. But I got in Microsoft 235 puts for the week after on that Friday. Basically, just 1 week worth of theta at $310. What I was looking at was this downtrend line here. As you can see, rejected once, twice, 3 times. You're already pushing above and you're rejected by the green EMA right here, which is my 50 EMA. And we did have some solid buying volume here since the 220 area, but I knew that the pump was overextended, and regardless of the trend line or whatsoever, we've already had 5 straight green days, and this rejection I thought was a pretty good risk to reward as far as short side play. And we can actually simply just lay that out by looking at this, with the stop loss being just above. Let's say if a daily candle looks like it's going to close above this area, 240 area, because that's been the point of rejection many, many times in the past, right? And each time we did break above 240, we pumped here, pumped here, pumped here, pumped here, pumped here, and repeat, right? And downside target pretty much until we test the next demand down, which would be the 220 area. So risk to reward wise, this was a really good way to get in short positions. So we got in puts there on Friday. Unfortunately, let's see what happened. Well, actually, no, I can't play the daily chart. Oh, there you go. We got in at 4:33 a.m. on 13th. What I was looking at was the rejection number 1 here. And pre-market, we were already seeing a lot of selling pressure. I'm not telling you to chase after, whatever happens from pre-market, but you can sort of see here the EMA is already converging down. Not only that, we rejected once and rejected twice, forming sort of like a double top formation. And not only that, what else did we have? We had massive bearish divergence here. So the momentum indicator, RSI, has a high, but a higher low, whereas the chart has a high and a higher high, right? But unfortunately, Microsoft ended up defending 234 and eventually did a massive pump. And let's go into next week. I think I cut this trade. Yeah, there you go. I cut it on the 17th, which is Tuesday. So pre-market opens. Obviously, I'm going to pause here real quick. Obviously, we got in right here at this symmetrical triangle break. Pumped really hard. But the reason why I still held was because we were still below this trend line that we talked about. Let me zoom out again so you can get a clear picture. We were still trading below this trend line. Okay. And towards the end of the day, we did see a lot of selling volume there as well. And again, another bearish divergence. Stock is going up, but the momentum is slowing down. So I held the trade, but another reason for cut was also theta. I should have bought more time because Microsoft did end up tanking a lot afterwards. But, we were already down deep, 50% minus. I wasn't going to average or add into like a contract where I'm already down so much, So this massive price action, I believe this was a CPI day. That's why you're seeing all these crazy candles. So they play out. Cut it at like 5 right around here. Market opens. We defended again this 235 area, and we pumped all the way up there. Yep, I believe I cut the trade right in that area. Now I'm gonna pause it. Now looking at the chart, even though we had a lot of divergences, we had lots of green volume spike, and huge volume right at open, which was bigger than pretty much the past couple days, right? This huge green volume here, and we close above the trend line. So that was my trigger and reason why I cut the trade. Unfortunate. What I should have done was wait until this trend line actually broke. That's what I should have done instead. Whereas I was only actually just looking at this trend line when I got into the short play. I can learn. So if you can draw something like this, and if you play it out, just play it out. Next day comes. And I believe this was the day we actually started. Yep, there you go. So we pushed towards the super support 236. We wake up, but the demand weakens, and we close below right over here. So the previous demand becomes a new supply. And we see a nice flush down all the way. So this right here should have been my entry. And the EMA cross here is actually more prominent. This was definitely a liquidation move. We got liquidated. But this here is right here is key. We test into the demand, break it, retest, and fail. So now these set of support, 236 area, is now a new resistance. And this would have been a much better entry. Risk and reward, we were still fine here. But we cut the trade because 1, didn't buy enough time on the contracts. 2, didn't wait for the break of structure to happen. Took an early entry. And another thing, 3, again, we didn't wait for the full confirmation, which was the break and retest. We always talk about break of this structure meaning the uptrend here, break of structure, retest, and reject. Rejection confirmation normally is like a bearish candlestick right after the break, so it can be this after the retest. Now we'll quickly go over our GS puts here as well. When did I get in those? Yeah, there you go. GS 360p pretty much entered right on this day after I cut the trade on 317 right over here. So this was more of a way better executed short side play because watch, we entered on the Tuesday 17th, 4:36 a.m., which is pretty much right at open, right around this area. We see this uptrend invalidate right here, right? So that uptrend breaks pre-market, rejects, and we open, we push, and we reject very impulsively. EMA cross, all 3 EMAs, and on the 15-minute, also below the hourly time frame. Okay, and we pretty much rode this all the way down till 80%. We trimmed some 200% on pretty much on that same day actually. Contracts did ended up going for way more here for 300%ers, but we can't complain about a 200% gain, right? So looking at the daily chart for GS here, very similar setup as Microsoft. So don't look at this now. Let me actually oh yeah, we're looking at this day, right? So again, this area was invalidated. This was a break, 362 area, and in the past also too, once 362 area broke, we saw a nice flush down here as well, right? Not only that, we were also very overextended from the EMAs. You see, we had 6 straight days of green. We had some volume, right? But it wasn't massive enough to defend the flush down we had right over here. Another confluence you can also bring is you can do like a Fibonacci retracement here too, from the lowest point to the highest point, right? And I personally like to use the 61% or 50%. Normally, those are like a good area of reversal or like, breakdowns and etc. So as soon as I saw that we broke below this uptrend, okay, instead of bouncing at the 38% fib level here, the demand here, demand here, demand here, we broke. And what do we always talk about? Once the support gets broken, it becomes a new resistance. Reject, straight flush down. Another thing that I noticed, that even though we tested the 50% fib level here, no buying pressure whatsoever. That's why I trimmed couple contracts on the way and I decided to hold my runners. And even after the 61%, no buying pressure whatsoever. Where's the 61? Right over here, straight red. And we ended up bouncing some at the all the way bottom, the daily demand of 340. But those are the reason why I held the trade, opened a couple runners, because we didn't see any buying pressure in the right demand zones.